Hello and welcome to another weekly financial update from RTS Financial Planning. This is where we discuss some of the stories in the world of finance over the last week and also some of the subjects that our investment committee are looking at as part of our RTS investment strategy. So before we start, apologies if you start to see some flashes of light. We're actually going through a thunderstorm outside. I'll actually stick the light on because it's really dark, so hopefully there won't be too many interruptions to this video. So let's dive in. So this week we found out that the UK has officially entered recession. But what you'll be probably surprised to find is that most of the world's stock markets reacted very positively to the dire economic data that was released. More on that in a moment. So yeah, the Office of National Statistics released figures that showed that the UK had entered a recession for the first time in 11 years. GDP fell around 20% during quarter two, and if you add this to the fall of around 2% in quarter one, that means we've officially gone through 2 consecutive quarters of falls in GDP, which is what a recession technically is. So we all knew it was coming. It shouldn't really be a surprise to anyone that we've entered recession. If you're going to lock down the economy, then obviously there's going to be consequences to that. And this is why the UK government will be so desperate to avoid a second national lockdown, because the economic consequences of that are truly dire. But what's probably more disappointing was the fact that the UK's fall in GDP, apart from Spain, was the worst in the world's developed countries, and it actually double the fall of Germany and the US. So with all this dire data, why did the UK stock market rise above 4% this week? Well, to start with, the UK stock market is full of globally diversified companies that trade with countries all over the world, so it's not just reliant on the UK for business. Also, stock markets are forward-looking. They're trying to predict the future. The reason we had a stock market crash in March was because the markets were predicting this type of economic data that's just been released. But now they've moved past it and look into the future, and with the help of government support and central bank pumping money into the system, they're much more positive about the future. But we can't be complacent. The investors that use globally diversified portfolios should not be deterred from their long-term investment goals. Our own RTS investment strategy is globally diversified, not just amongst countries and businesses, but also into different asset classes. Assets like cash, fixed interest bonds, commodities like gold, and also property, that will all return different ranges in different economic scenarios. Speaking about property, the UK financial regulator, the FCA, announced this week it was doing a consultation on investment property funds. A lot of you will hold investment property funds as part of your portfolio and will find that most of the open-ended funds are actually suspended currently. The reason for the suspension is because these types of funds hold physical buildings like office blocks and retail units. And since COVID struck, it's been incredibly difficult to value these types of buildings. For example, we don't know going forward now what the demand's going to be like for office blocks with all people now working from home. The FCA don't like the fact that these funds are suspended and that investors can't get their money out. So they're proposing things like notice periods for withdrawals and potentially banning these types of products from ISAs, which will cause some trouble for investors already holding them inside their ISAs. Our investment committee are currently looking at alternative property fund structures and alternative investment objectives where these types of funds might invest in warehouse distribution centres or supermarkets that have much more positive prospects for growth going forward. So look out for our article on this in the next week or two, where we'll be discussing more about the options available for investors. So that's it for this week. That wraps up another weekly update. Do leave a comment below to let us know how you're feeling about your investment portfolio right now. What worries you, or what have you seen that's been quite positive for your portfolio? And also please remember to subscribe to our RTS Financial Planning YouTube channel, because we regularly provide different videos on different subjects around investment and financial planning, which you may find useful. Until next time, take care.